Welcome to the Transparent FX Academy. In this video, I'll speak about GBPUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that at the moment the market is rejecting to the upside a quite strong historical monthly demand and support zone. In fact, from here already in multiple occasions, the market has tested the zone and rejected it to the upside quite aggressively. And every time these rejections to the upside have come with very strong institutional buying. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis to see what institutions are doing on GBPUSD. But for now, let's keep in mind that this is a very strong historical demand and support zone. Only one time the market broke below it right here, and immediately that push to the downside anyway ended up being a fake breakout because the market immediately broke back above and continued respecting this level as historical demand and support. And what we can see is that right now we had yet another test of this exact same zone, and the market has already started rejecting the level to the upside. What we can also notice if we move here to the most recent price action is that the market is currently retesting the previous monthly high. From here, this is the supply and resistance zone from which all this push to the downside was created. And what we know is that previous supply and resistance, once it is broken to the upside, becomes support and demand. And the market is currently retesting that support and demand and has already started rejecting it to the upside. We can also notice that as we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how the market has retraced exactly to the 0.32 retracement, which was also in confluence with this previous resistance turn support, creating confluence of demand and support inside of this area. And right now the market is rejecting this confluence of support zone to the upside, which is exactly what you would expect in a situation like this. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the price action and structure so far has been perfect, moving exactly as you would expect from a textbook perspective. In fact, what we can notice is that we went from the creation of weekly lower lows and lower highs to then the creation of weekly higher highs and higher lows. So we had a perfect inversion of trend. And in an ideal uptrend, what you expect is the market to every time create higher highs and higher lows, retesting the previous highs. And that is exactly what happened here. The market every time went and retested the previous levels of resistance from which the previous correction started. And at that point, as we know in the market, once the previous high is broken to the upside, it shifts from previous resistance to support. And the market has been respecting every time these previous levels of resistance turn support, as you would expect in an ideal uptrend. So the market has been behaving as you would expect. And what we can see is that after all this uptrend was created, the market for the first time created a deeper correction, creating first a low and then a lower low. However, after that, the market inverted to the creation of an equal high. And what you expect when you had first a lower low and then an equal high is to see the correction and continuation to the upside. Essentially, the creation of an inverted head and shoulders with the left shoulder, head, and right shoulder here. And that is exactly what the market did. And we just had this massive rejection to the upside. Now, I also spoke, if we drop down here on the daily time frame, about GBPUSD just a few days ago, identifying the area as resistance. And I explained all the reasons for which I was expecting the break, the retest, and the continuation to the upside. And that is in fact exactly what the market just did. We had the break, retest, and right now we're getting the rejection to the upside. And I will link in description that previous analysis, so you can go and check it out for more free education. But at the moment, what kind of structure we have? Well, before we dig deeper here into the technicals, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing on the GBP. Well, first of all, we have to keep in mind that if we're looking at the GBP, we're actually already looking at GBPUSD, because all currencies on the spot are traded against the USD. And what we can see here is that net positions have been in the very short term increased from minus 39k up to minus 33k. So it seems like from the low here, we're now starting to get an increase in the net positions, because if we look at the positioning from an institutional perspective, we can see how shorts are getting decreased. We went from 112.8k down to 108.4k. And if we look at the longs on GBPUSD, they're getting increased in the long term from 65.6k up to 74.8k. So it seems like institutions are decreasing their shorts and increasing their longs. And since all currencies again on the spot are traded against the USD, this means that we are already looking at the data for GBPUSD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So here in the daily, we do have resistance all across this zone, but these levels of previous supply and resistance are now well broken to the upside. So all these previous resistance zones, which previously were support areas here, so this previous level of support, which was then turned resistance all across here, is now again acting as support. And as the market has created a new impulse to the upside from this low now to this high, if from here the market is to go and retest again, so create a new correction, which is normal in an uptrend, because an uptrend again is composed by a series of impulses and corrections, and every correction gives the possibility for new institutional buyers to enter the market and push the price higher. If the market here will provide a correction, what we would have is a confluence of support zone, because as we know, when there is an impulse, if we want to measure the correction, we have to take a Fibonacci from the low to the high of the impulse leg. And at the moment, if the correction is to start from here, we still don't know if it will start from here, but if it is to start from here, we would have the 0.32 and 50% retracements lining up with this previous level of resistance turn support, creating a confluence of support inside of this level. And what we know is that when there is a confluence of support, there is an increased probability of seeing institutional buying, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if we will have a correction to this zone, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about,
have access to the live trading show. So essentially every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.